Hey guys, how are you? Andy Suku, founder and CEO Y2K Credit Solution, consumer credit expert. Been in the industry for a little over 16 years now. So today I have a very important topic I need to speak to you guys about. And this topic is for all of our clients. I just finished our credit program, got new credit, got new credit cards. These are for clients that we did consultations for. And these, this information, everyone could benefit from this information, right? And as you know, we're in a recession. Well, let me rephrase that. Some are saying we're in a recession. Some are saying we're not in a recession yet. Some are saying the recession is going to hit at the end of the year, right? All we can do is follow the news and, see where it goes. Now, a lot of our clients that finish our program, you have new credit, you have new credit card, prime credit cards at that, with limits of $9,000 and higher. Now, when we do audits on our clients' credit every month to see what they're doing with their credit, how they're maintaining it, and if they're following our instructions, we came to find out that a lot of them are maxed out on their credit cards. Now, that's an issue, because if you're maxed out on your credit card, when you got your credit cards, your first cards, your scores were in the 740, 730. If you're monitoring your credit, like we advise you to, you will see that your score drop. Now, here's the issue with that. If you keep your credit cards maxed out. Now, what I mean by that, let me explain that. Let's say you have a credit card limit of $9,000 from Chase, and your balance is $9,000. That's maxed out you're maxed out on a credit card. Now you're gonna go around and make the monthly payments, right? Now the monthly payments, as you're making them, 90% of that is going to interest. 10% is going to principal, right? If you keep that balance high, especially coming in towards the end of the year, where banks know that people are going to go shopping, you're new to credit, there's a recession coming, banks are going to start to tighten up on how they extend credit. And I've said this over and over in many other videos, and every single year, between October to December, it happens. And we cannot fix this issue. If you keep that credit card balance high, after 90 days, you become high risk to the bank. That means you can't pay it off. And what they're going to start to do is start to cut your credit limit. So let's say you owe $9,000. The balance has been like that for more than 3 months. They're going to cut your credit limit to $5,000. Now that's called upside down of credit. You owe $9,000 and your credit limit is $5,000. So you're upside down. Now your score is going to drop. Now once your scores start dropping, all your other credit card, prime credit card companies that you have cards with, they're going to be alerted because your score is dropping. Every bank has this system set up to know when your credit scores drop, right? If your credit score drops, all the other credit card companies are going to be alerted. They're going to start doing the same thing, especially Bank of America, Chase, Discover. They all do the same thing every single year. It's proven. I've showed you guys this before. They're going to cut your credit limit. Now, you're going to start making the monthly payments again. They're going to keep dropping the limit until you get the $1,000 limit or $500 limit. Now, if you have a $500 limit and you're $9,000, your score is going to drop tremendously, right? Now you can't apply for credit. You're back to having a bad credit score and you're in debt again. Now, once you start paying those cards off, even if you bring the balance down to zero, the bank is not going to give you back that $9,000 credit limit again. It's going to take some time. Most of the time, it takes about 6 months to a year of you paying on time, not maxing out the $500 limit, and every 6 months they're going to review your credit to see if you're eligible for credit line increases. So if you're a client that just finished our program, the Y2K program, you just got prime credit cards, I'm telling you guys, we're doing audits on your file every month because that's what we do for our clients, and you're maxed out. If you do not bring these balances down, especially going into the end of the year with the recession coming, holiday season, you are going to lose that credit as fast as you got it, and we cannot fix it. That's not something we can fix. So I'm letting you guys know right now. This goes for the clients that we do consultations with as well on a daily basis, and I advise you guys bring those balances down. It's going to affect you at the end of the year, and you're going to be really, really pissed off. So get those balances down now. Stop making monthly payments, because the monthly payments is just a waste of time. You got to double up on the payment. If your monthly payment is $300, you need to pay $600. Remember, banks are in the business of making money. They make money on interest. So 90% of your payment is going to interest, 10% is going to principal. And after 3-4 months, you're going to get frustrated because this is how clients end up in debt. You're gonna get frustrated because the balance is not going down, and you're gonna start blaming the bank. It's not the bank's fault. It's your fault and your money management and your credit. You have poor credit management. All right, and we educate you guys on this stuff. We teach you on this stuff. We go as much as we can above and beyond to educate you once you get your first credit card. This is why we tell you, do not apply for anything until we tell you to do so, because we want to make sure you're not in the situation again. If you have any questions about this video, leave a comment below and I'll try to answer it for you guys. But guys, go to our Score Navigator website, create an account, and on your dashboard it'll show you all your credit cards and show you which credit cards are maxed out. Use that as the guidance if you do not want to call every one of your credit cards or you don't know how to track it. All of this is done in our Score Navigator credit monitoring app. We also have the point reduction system in there that's going to teach you how many points you're losing. All right, and it's all on one page on the dashboard. We made it very simple and very easy for you guys. But the fact of the main point of this video is bring those balances down, because if you lose those credit cards, you're not going to be happy. All right, talk to you guys soon.